In the ever-evolving world of electric vehicles, institutional investors are making moves that could reshape the landscape of the industry. Today, we're diving deep into a recent development involving Lucid Motors, a name that's been generating buzz in the EV sector. Curious about what the big players are up to? Stick around, and let's unravel this together. Alright, let's take a look at the news. The recent deadline for institutional investors to file a Form 13F has unveiled some intriguing insights about Lucid Motors' institutional ownership. As of June 30th, Lucid, an emerging electric vehicle company, witnessed a surge in its institutional ownership. The number of 13F filers disclosing a stake in LCID stock rose to 456, marking an increase of 9 filers from the previous quarter. Among these, Ayar Third Investment Company, a subsidiary of Saudi Arabia's public investment fund, stands out as it holds Lucid in its top 10 positions. Now, here's where things get interesting. These filers collectively own a whopping 1.66 billion shares of Lucid, a significant jump from the previous 1.31 billion shares. But there's a twist. Lucid's institutional put/call ratio has risen to a high 1.77 from 1.65. With 40.80 million puts and 23.10 million calls, this indicates a bearish option stance. So, while there's increased ownership, there's also a heightened sense of caution. Vanguard, a renowned exchange-traded fund provider, has made a significant move by adding 15.03 million shares of Lucid during the second quarter. This acquisition has bolstered its total position to 73.16 million shares, making Vanguard the second-largest shareholder of Lucid, only trailing behind Ayar by about 1.3 billion shares. Other major players like BlackRock and Bank of America have also increased their stakes, with BlackRock adding 10.99 million shares and Bank of America adding 14.80 million shares. However, it's essential to note that Lucid's journey hasn't been all rosy. After soaring to the $50 range post its SPAC deal, the stock has taken a hit, now hovering below $7. This decline can be attributed to challenges Lucid faces in ramping up production and the fierce competition in the EV market. In the second quarter, Lucid managed to deliver 1,404 vehicles, a commendable increase from the 679 vehicles a year ago. They also produced 2,173 vehicles during this period. However, their quarterly revenue of $150.9 million fell short of the analyst estimate of $175 million. Despite this, the year-over-year growth stands at an impressive 55.1%. Lucid remains optimistic about its future, reiterating its 2023 full-year production guidance of over 10,000 vehicles. Earlier projections had placed this number between 10,000 and 14,000 vehicles. So, what does all this mean for the stock's value? The increased institutional ownership, especially from giants like Vanguard and BlackRock, signals strong confidence in Lucid's potential. Their investments could be based on Lucid's growth trajectory, technological advancements, and the broader EV market's potential. However, the bearish option stance indicates that while these institutions see potential, they're also hedging against potential risks. Lucid's challenges in production and revenue shortfalls are valid concerns, but their ambitious production targets for 2023 showcase a company ready to tackle these challenges head-on. If Lucid can capitalize on its plans and navigate the competitive landscape, there's a strong case for an increase in the stock's value. Now, let's discuss the upcoming trading session's surge signals for the stock. The upward surge signals are set at $6.50, $6.58, and $6.70, while the downward signals are $6.30, $6.18, and $6.1. These numbers are crucial as they indicate potential price points that could confirm a directional move for the stock. If the stock approaches or breaches these levels, it could signify a strong bullish or bearish trend. For instance, if the stock surpasses the $6.70 mark, it could indicate a strong upward momentum, possibly driven by positive market sentiment or favorable news. Conversely, if it drops below $6.1, it might suggest a bearish trend, possibly due to negative market sentiment or unfavorable developments. Traders and investors should keep a close eye on these levels as they navigate their positions. Thank you for joining us on this deep dive into Lucid Motors and the intriguing moves by institutional investors. If you found this analysis insightful, please give this video a thumbs up, and don't forget to subscribe for more in-depth market insights. And here's a question for you. How do you see Lucid Motors performing in the next quarter? Drop your thoughts in the comments below, and let's get the conversation started.